part of freedom is being able to manage your finances, and attempting to time the market is always a precarious decision to make, because most of the time when you're out of the market, you miss those few days a year that contribute to the majority of the market gains. And again, this is not financial advice, but let me tell you that right now the market is at very close to an all-time high, that all-time high being met on Friday. And as we go into the 4th of July weekend, I have to wonder where the demand is coming from that will create a surge in corporations' profits, given the fact that interest rates are at over 5% right now. There is going to be decreased demand to buy homes and big ticket items that are accompanied with interest rates. Real wages are not rising nearly as high as inflation, along with nominal wages for that matter. And inflation, although it's come down theoretically a couple of percent from the 8% level, is still much higher than normal. So you are seeing increased cost of goods that are outpacing whatever rise in wages might exist. To top it off, you have student loans that are going to have to start to repaid unless the Democrats figure out a way to defy the Supreme Court yet again, which is something that they seem to very much enjoy doing. They want to take all the power for themselves, for the moral majority that the conservatives used to be. This is kind of the way the Democrats see themselves today. But back to the markets. What is propping up the markets and extending their highs? Could we be in, once again, bubble territory? Well, there is two things, nay. First of all, artificial intelligence is going to lead to massive productivity gains in ways that we can't even comprehend right now. We're at the very nascent stages of it. And so maybe that is being priced into the market. That is certainly a possibility. And so AI companies like Google and Microsoft that have really managed to build this out are going to be huge beneficiaries of these productivity gains, and whatever fees that they are able to take in for allowing people to use their programs, it's going to be very golden years. And many companies might be able to lay off employees that would otherwise cost them many thousands of dollars, hundreds of thousands of dollars a year per person. That is a distinct possibility. And the other thing that keeps the markets at an elevated state is the fact that everybody seems to be expecting the Federal Reserve to start printing massive amounts of money in order to water down the debt. It's literally watering it down, because what you get back is not in the same concentration of dollars that you originally contributed to the US government, to governments around the world, because this is not only a US phenomenon. Think about this. We have $400 trillion of liabilities. That includes the Social Security and Medicare payments that are going to balloon as more and more of the baby boomer generation retires. And the unfunded liabilities of the US government are such that it will absolutely require either the massive gains in productivity that might not even show up in GDP and are going to be very difficult to tax, or you are going to require the government to print more money. And which is the easiest thing for them to do? They're going to print more money. They are going to continue to debase the currency. And so people that are watching the stock market are essentially making the bet that the Federal Reserve is going to parasitize savers, are going to steal very silently money from around the world that was saved in US dollars or whatever foreign currency might apply. Whenever you print money, again, you are reducing the concentration of the dollars that one holds, thus making it worth less and eventually becoming worthless as well. And that is what investors are betting on. And it's not a productivity gain when the US government prints more money and increases GDP with the nominal rise of prices and the same amount being purchased because you aren't actually creating more product. So the Federal Reserve, the government, acts as a parasite for those who have saved their wealth, and the investors that win are those who have taken out loans at low interest rates, for example, from the Federal Reserve, like BlackRock gets, and investing it, leveraging it, and then watching their friends print that money, which again goes into assets that will rise with the money printing. The other thing that will stand to benefit, assuming that the Federal Reserve does this and adds liquidity into the system, what will act like a sponge specifically is Bitcoin. But regardless, I just want you guys to understand why I believe that the market is at an all-time high at this moment, or very near it, and why we continue to go up despite the headwinds that we are facing and the money going over to Ukraine and the potential war with China. Yes, those are all variables that are not 100%. I mean, at least the war with China and the continued war with Russia, I mean, hopefully that gets settled and we don't see continued loss of life. But the only thing on the productivity end that is holding up the stock market are the increased gains that people are projecting from artificial intelligence, which are very likely, in my opinion, almost a near certainty because we're already seeing them. But mainly, I believe that it is the incentive of the Fed just to start printing money, and it's all going to flow into the stock market. And that's really what's being priced in, because these companies are trading at pretty high multiples now. And other than these two things, there's no reason for it. But yeah, those are my thoughts. Leave your comments, leave your thoughts in the comment section below. Peace.